All right, guys, welcome to today's awesome meeting. Welcome to today's awesome class, right? So, today we'll be talking about a special and a unique candlestick pattern. A special and a unique candlestick pattern. We must have heard about it, even though you've not heard about it, you've seen it somewhere. Even though you've not seen it somewhere, probably you've used it. So it's a very sensitive candlestick pattern that I use. I will only bring a candlestick pattern that I normally use and a killer strategy. This is a killer strategy that I use, a killer candlestick pattern that I use. And it's also good when you use it. Oh my goodness, it's a killer candlestick pattern. I use it for my confirmations. Depending on the strategies I'm using, this is a killer pattern. So if today is your first time joining this channel, do well to hit the subscribe button, share to your friends, because that's the most important thing, because it will help to reach out to a lot of persons that finds it difficult to make analysis, and they can also capitalize on our daily analysis, right? So what do we have today? What's that secret we have today, right? So let's quickly get to our slide. We are talking about the engulfing candlestick today. Engulfing candlestick, right? So some of us must have heard about Amweba, right? Amweba. Amweba feeds through what? Engulfing. Amweba does not have a mat of its own to feed, but engulfs. Engulfing simply means enveloping, taking over, taking charge. So that's how it is in this market. And the good part of it is that this is a reversal candlestick pattern. It simply means enveloping the previous candlestick or covering the previous candlestick. It is a killer pattern. Remember, if you have questions on any type of candlestick or on any pattern, endeavor to ask the questions below the video, and I will attend to all your questions just like every other person's too. Right. So it's a reversal pattern and it's a killer pattern in the market. There are only two types of it. We have the bullish engulfing pattern and we also have the bearish engulfing pattern. The bullish engulfing pattern and we have the bearish engulfing pattern. So the bullish pattern is something like this. You find it like this. Yes, is seen mostly seen at a support zone. Now this is what they teach people outside. They tell you take it or trade it in an exhaustion of a hand trending market. That is when the market when the trend is exhausted or is getting exhausted. That is in a hand trending market. What do I mean? I'm talking about a market that is making a high, a low, a lower high, a lower low, a lower high, a lower low. So by the time it's about to reverse, this is one of the candlestick pattern it forms. So outside, they teach, oh, take this pattern, trade it in an extension of a hand trending market. But I'm also going to share with you the unusual way to use it for you to be also be profitable, and another pattern which I use too for you to be profitable, right? But before that, let's before sharing with us and getting to our chart, let me share the characteristics with us. Now they are trading at a sensitive support zone in an exhaustion of a down trending market, right? Just like this. In the exhaustion of a down trending market, when that down trending market is getting exhausted, at the support zone, you see the bearish one first, then the next one is an engulfing candlestick closing above, you can hit for a buy. You don't need any other confirmation again. I don't care what they are teach what is being said outside, but you do not need any confirmation provided you've gotten your parameters right. But there is still a clause and a second way of trading it, right? So you can see of a hand trending market they are traded at a sensitive support in an exhaustion of a hand trending market or in an uptrending market after a deep retracement. What does this mean? In an uptrending market, you can also trade it. How do you trade it? That market that is making a high, a low, a higher low, a higher high, a high. In an uptrending market, at what price or at what place do you buy? You buy at a higher low, right? So when the market is done making a higher low or a deep retracement, you can wait for your confirmation or look out for your candlestick confirmation. And one of the confirmation is this engulfing pattern. And when you get it, you go in for your buy in the market. Now this candlestick pattern simply means there is a direct shift in strength. Remember, in a downtrending market, you see the market making a downtrending market. It simply means sellers are presently present in the market, right? Yes, but later you're not seeing a good bullish candlestick closing above the previous candlestick. It's trying to tell you that buyers are present in this market, right? It shows a sharp shift in the market. At the opening of the next one, you go in for your buy, right? So they are reversal patterns. Whenever they are spotted in the support zone, they are reversal pattern. It's trying to tell you that by the time you see that shift, engulfing. What I mean by engulfing, the body of the candlestick, the body of this candlestick has to engulf this previous one. You can go in for your buy in the market, right? So it is made up of two candlesticks. The first bearish one and the second the bullish one. Engulfing or closing above the bearish candlestick. Right, two candlesticks just like this. The first the bearish one, the second the bullish one. But the difference between the second one and the bearish one, if you use the red color to represent the sellers, that's good. But the bullish candlestick, no matter the color you are using, must engulf the bearish candlestick closing above. That is, it must close above. Then you can now go for your buy in the market. The close above is a must for you to call it an engulfing candlestick. The close above can be with or without a wick. Provided the body has eaten up the previous candlestick, the bullish candlestick can be with or without a wick. The bullish candlestick can be with or without a wick. At the close of the engulfing candlestick, you go for your buy. You don't necessarily need to wait for any further candlestick confirmations. You don't necessarily need to wait or to look at, oh, what do I need to do? Or is this good or bad? Or is this engulfing? Provided it has closed and the parameters are right, you go for your buy in the market. This is one of the strategies I use. This is one of the best candlestick pattern I use. This is a good example. Sell, sell, sell. Then giving this. At the end of this, what happened? You wait for the close above, closing above, you can now go for your buy in the market, right? So this is a bearish engulfing pattern. Now, this is the direct opposite of the bullish engulfing pattern. I come again. This is the direct opposite of the bullish engulfing pattern. So this one is found at the resistance zone. It's a reversal candlestick pattern found at the resistance zone, which shows a reversal in the market for a sell. It shows a reversal in the market for a sell. So when you spot it at the resistance zone, you just look for a sell in the market. It shows a shift in strength. A shift in strength. That means there is possibility for the market to head for a sell. And whenever it's spotted, it goes for a sell. You see the market going for a sell and selling and selling and selling. The sell is high. So these are the characteristics, right? So they are traded at a sensitive resistance zone in an exhaustion of an uptrending market. Sensitive resistance zone. They are traded at a sensitive resistance zone at the exhaustion of an up. You see the market buying, buying, buying. So by the time this market or this trend is about to reverse, you see this closing below. You see closing. Now the difference between this engulfing and a dark cloud is that a dark cloud, when it gives a gap to the upside, it closes 50% of the previous candlestick, but the engulfing must close below or above. That makes it an engulfing candlestick. That makes it an engulfing candlestick. It shows a reverse. At the end of the day, it's a sell in the market, right? So these are the different types also in the market. Different types in the market. You can also trade it in a downtrending market, not only in the exhaustion of an uptrending market. By the time the market is making a downtrending high, low, lower, high, lower, low, lower, high, lower, low. Remember, in a downtrending market, you buy at a lower low, right? Lower high, right? After the market has made a deep retracement. Now, after making that deep retracement, giving you this bearish engulfing, you just have to sell the market. Just like this, you just have to sell the market, and you always see the market heading towards your direction. Heading towards your, seriously going towards your direction. At the end of the day, you see yourself making a whole lot of profit from the market, a whole lot of profit from the market. At the end of the day, you see yourself making a whole lot of profit from the market. So there are reversal patterns too. There are reversal patterns too. They are known as reversal patterns in the market. Just as seen here, there are reversal patterns in the market, right? So it's made up of two candlesticks. The first, the bullish one, and the second, the bearish one. It's made up of two candlesticks. The first, the bullish one, and the second, the bearish. All right, so it's made up of two candlesticks. The first, the bullish one, and the second, the bearish one. Engulfing or closing below the bullish candlestick, just the way you see here. First, the bullish candlestick, then second, a bearish candlestick, but closing below the bullish candlestick. So it has to be that way. The close below can be with or without a wick. Just the same way, it can be with or without a wick in the forex market. At the close of the engulfing candlestick, you go for a sell. You don't have to wait. I don't care what other persons people say and share. This is what works, and this is what works for me. So let's quickly see if we can spot something like this on the chart. All right, so we've not even opened nowhere. Look at a good engulfing candlestick here. A bearish engulfing. You can see at the close you enter. Then set your stop loss above, not exactly at your entry. Your stop loss above, take profit before the nearest support zone. That's for a bearish engulfing. You see it working for you, right? So these things work. This is a bullish engulfing. It must close above. This is a bullish engulfing. Bearish engulfing, closing, look at this good bearish and closing below with the wick, whether it has a wick or it doesn't have a wick. These things are things that work. Look at this. This is a bullish engulfing. These things are things that work. You are enjoying it. Remember to share to your friends, your families, those of them, so that they will be able to capitalize and also enjoy this wonderful trade setup, and especially daily signal. You can see at the end of this bullish close, the market was initially selling, but at the end of this bullish close, there was a good buy. You can see this. So as a way of in the market, as a way of recap in the market, we started by talking about the different candlestick pattern, the different candlestick patterns in the forex market. We started with the engulfing candle. It's a reversal candlestick pattern. Simply means enveloping the previous candlestick or covering the previous candlestick. We also said it's a killer candlestick pattern in the forex market. There are two types: the bullish engulfing pattern and the bearish engulfing pattern. Therefore, the bullish engulfing pattern, we established this: any candlestick closing above, with or without a wick, then these are the characteristics. They are treated as sensitive support zone. They are reversal patterns. Remember, you can trade at a sensitive support zone. That is an exhaustion of a downtrending market or in favor of an uptrending market. They are made up of two candlesticks. The first, the bearish one, and the second, the bullish. The close above, you can be with or without a wick. At the close of the engulfing candlestick, you go for a buy in the forex market. So this is a good example. Then we talked about the bearish, a reversal candlestick pattern found at the resistance, which shows a reversal in the market for a sell, right? So these are characteristics. They are traded as sensitive resistance zone, either a sensitive resistance zone or in a downtrend, but you must allow for a deep retracement to the upside. Then at a lower high, giving you a bearish engulfing, you can go for a sell. They are reversal patterns. So it's made up of two candlesticks. The first, the bullish, then the second, the bearish. The close below can be with or without a wick. At the close of the engulfing candlestick, you go for a sell in the market. And these are the different examples in the market. So you're enjoying this, enjoy your day, do well to use it, trade profitably. Provided you're doing the right thing, you always see it working. And your questions, send them below. I will definitely take your questions. All the questions, send them below. No matter the question, whether it relates to this topic, but provided it's on Forex, send them below. I will definitely take your questions. Oh yeah, do well to enjoy yourself, make more profit. Thank you so much. Bye now.